Good afternoon, good afternoon, good afternoon, good afternoon. It's Ronco Johnson, your lifestyle focus advisor here. Thank you guys for joining us. We're here. It is Friday, Lifestyle Focus Friday. You know, it's my favorite day of the week. I get a chance to come back home and talk about all the adventures that's happened over the last 7 days. And I get a chance to be with you. Today, we're going to talk about growing your emergency fund using life insurance. And I'm going to show you the advantages of how that works today. So I want to give you a moment to get in the room. We need all your energy today. And we look forward to seeing you. And if you could, drop a little information down in the box. Let me know that you're there in the comments. I'm going to ask you from the very beginning, you know, if you wouldn't mind. It will help our ratings. It will help all the things that we're doing. If you're viewing this broadcast, if you would just click like, share, and if you're on YouTube, subscribe and share it with your family and friends. And don't forget to hit the notification bell. Okay? It will help us out a lot, and that gives us an opportunity to talk to you every time we have a new video come out or some new content coming out, and we want you to be a part of it. This is When the Lights Go Out. Are you ready? It's Lifestyle Focus Friday, and that's what we call this. And, every Friday we try to get together and we discuss something different, a different topic. Today we're going to talk about building your emergency fund using life insurance. And what are the advantages of that? And I hope you take some detailed notes and give it a shot. If you're interested in having us design or engineer a program for you, please leave it in the contacts or get in contact with us at lifestylefocuswealth.com and schedule a one-on-one with us. We would love to sit down and talk to you about what that looks like. If you're interested in private coaching, same thing. www.lifestylefocuswealth.com, and we can assist you in getting together and seeing what it is that we can do to help your life be in a better position financially. All right, so let's jump into it. I know our team today has a difficulty getting in the back office. For a moment there, our links to Facebook were shut down, but that's okay. We got it back up and going just in time to have this live. So if you're here in the comments, please say hello. Say hello. You know, worldwide, this has been a rough week. You know, all the things happening overseas. I first have to say, you know, being in the insurance business, anytime there's somebody that or some event that happens that takes the lives of others, it's difficult. It's difficult for the families. It's difficult for all of us, right? Like we need more trauma in the world. You know, I would like to see the results of how we're gonna be reacting years from now from all the trauma we're experiencing, from COVID to wars to loss of loved ones. You know, and how our kids are going to come out. So, you know, I like to see the documents on that. I think we might be due for more than a stimulus check. But that's not what we're here to talk about. We're here to talk about how do you create an emergency fund using life insurance. I know there's somebody out there saying emergency fund using life insurance. That's an expensive way to do it. But I want to show you how the wealthy have been doing it for years. This is the secrets of millionaires and billionaires. we're gonna share that with you. Hey Sam, I see you out there, buddy. Good to see you. Give me a thumbs up. Thank you very much. And be sure to share with your friends. We're gonna give them time to get in the room. We're just about 4 minutes in, and because this is gonna be pretty quick. This is not something that's very difficult to do. You know, let me ask you, are you one of those people that have difficulties saving money? If you are, raise your hand, say something in the comments. You know, if you have a hard time saving a little bit of money, a lot of money over a long period of time, you know, you're not alone. And the part about our lifestyle focused wealth community, this is a community of people already taking advantage of how they use their cash value insurance. Yes, to do of many things. They buy cars, they buy homes, they start businesses, they use it to leverage in their business. Maybe they have key man insurance or buy-sell agreements. And we're going to talk about all these different ideas. I think one of the biggest things and one of my motivations in being in this position to offer this information to you is the fact that we only talk about life insurance as a way of passing away. The average person out there probably thinks about, well, when I die, someone's going to inherit it. Or I don't want to make everybody rich. You hear those things all the time, but it's really not about that. In my opinion, owning insurance is one of the best ways to show how much you love someone and you care for someone and you're taking care of your personal responsibilities. See, when the lights go out, and they will, it's your responsibility to take care of all the things that you did while you were living. You know, like create more wealth, create more taxable income that you're passing on to your family. Yes, we do want to take care of that. And for you young people out there, if you're the ones to inherit money, it's not for you to go out and just spend, but it is for you to get a head start. And today, the emergency fund is all about creating a head start. And that head start can start anytime. And you can be of any age. Parents, you can start doing emergency funds for your children right now. As long as they're 18 days born. Start now. And that's the cheapest time to buy life insurance is when it's low. Okay? And that's one of our favorite secret financial tools that we use. Okay? And that's something that I want to encourage you to look at. Here's what happens. I am going to be discussing how this works and using a permanent insurance today. This is not term insurance. This is permanent insurance. And y'all all know me by now. I like to talk about dividend participating whole life policies from mutually held companies. Not stock companies, but mutually held companies. Why am I saying that? If you've caught some of our other videos, I try to educate you on what these policies mean, because it's too many times that we tend to think all these policies are the same, and they're not. They're not even close to the same. It's all about who's engineering them and who's designing them and what the purpose of use is for. That's correct. What the purpose of use is for. You know, on this program, we've also talked about the infinite banking or becoming your own bank concept, where you overfund or maximum fund. One of my favorite reasons to use life insurance is to overfund it, using it as your own banking system. And what we mean by that is putting a amount of money above the premium that goes straight into your cash reserves or your cash value. And it begins to earn a dividend on an annual basis if dividends are recognized by the insurer. Dividends, I should say, are never guaranteed. However, that's why it's important to look at the financial strength of the institutions that you work with. If you want more details about that, just catch us down low at lifestylefocusedwealth.com and request a one-on-one with me, and I'd be glad to give you a list of the ones that we work with and discuss with you what the differences are. But today we're talking about using a dividend participating whole life policy. Okay? So here we go. So say you need life insurance. We already understand that one day the lights will go out. However, that's not what we're using it for. Today we're going to talk about using it for the living benefits of life insurance. The living benefits. So often we talk about the death benefit, but today we're going to talk about the living benefit. The living benefit of life insurance is one of the things that are, in my opinion, one of the most misunderstood things that should be talked about more. Why? Because you actually have control over that. You have control over it. See, first you got to understand that life insurance gets special taxation from our government. And it is something that you can use to grow compounded interest. You can earn dividends from it and interest, okay? You have access to your capital by policy loans or withdrawals. I will say this. The difference between a policy loan and a withdrawal is the fact that withdrawals might cause a taxable event because it's considered income. But if you take it as a policy loan, that's exactly what it is. It's a loan. And when you take a loan from life insurance, you're allowed to use that money income tax free. So we also got to remember, a loan from life insurance is not like a loan from a credit card. It's not like a student loan. It's not like your mortgage loan. It is simple interest. Simple interest on the money that you've borrowed from your policy that's due one time in a year. It's due one time, not monthly. The insurance company is not going to be sending you a monthly statement. Okay? That's not what they're going to do. They're not going to be asking you, hey, when are you going to pay us back? They've already leveraged that by offering you a death benefit. And that death benefit reduces based on the amount of money that you take out in a loan. Now, you guys already know that when we're talking about borrowing money, we got to be good bankers. So the intention is to pay ourselves back. But how can we pay ourselves back with interest? Creating an emergency fund. Let's talk about it. If I am paying a car note at XYZ auto part place that has my car, and I'm paying them 6%, and let's just say I owe $5,000 on the car. All right? If I have $10,000 to $15,000, $20,000, let's say 20 of cash value, we already know that I can borrow against my cash value. I can take out $5,000, pay that car company off. They're going to give me the deed and the title to my vehicle. And then I'm going to take the $500 a month that I'm paying them for my car, and I'm going to transfer it to my policy. Now that sounds simple enough, but what have I really transferred? I've also transferred the interest that they're charging me on that vehicle or on that loan to myself. So if they're charging me a 6% interest rate, the auto company on that vehicle, when we paid them off and we paid the same amount that we were paying the finance company, we pay the same amount to our insurance policy, we've established that we're paying the same interest rate to ourselves. So in this case, if that was 6%, that's coming back to our policy loan. In simple interest, we're paying it. That just means that the money that we use is going towards the principal payment, not going towards interest and then principal. That's a big difference when I can put every dollar towards my principal. Here's another advantage. Advantage number 2. And if you're with me, I need to see your comments and you can start putting your questions down because I know you're going to have questions out there. And if you don't have any questions, make up one. and we'll talk about it, okay? Because this is live. We're live today. All right, so the second reason, if I, again, using the same scenario, if I've had $20,000 in my insurance policy and I, again, borrowed $5,000 out of it to pay my car off, I now have the deed and the title. The car is now paid down to zero. We were paying $300 a month on the car. That has now shifted over to our policy. So I'm going to pay the $300 a month back to me or back to my policy. That $300 a month includes that 6% interest that they were charging you at the finance company. Well, guess who's getting that now? We are. So some people say, well, wait a minute. Do you still get the dividend? Well, that I'm glad you asked. The one thing I love about the life insurance, especially whole life insurance, and these dividend participating whole life policies, is the fact that when I borrow money, I'm not borrowing from myself. You need to understand the money that we're borrowing comes from the insurance company's reserves. That's why your money is uninterrupted. See, you put $20,000 into the account, it's never interrupted, it's never touched. But the insurance company, on the other hand, is willing to match what you've put in and allow you up to 90% of what you've put in to be available to you, okay, as a loan. And when you do that, you take out that $5,000. Let's just say you had a $100,000 death benefit. Well, it's going to reduce that death benefit by $5,000. Okay, so that's how you don't have to worry about if I'm going to make my money. Your money is uninterrupted. It's never been touched. We are using the reserves of the insurance company that allowed you to leverage their death benefit. That's how you continue to earn compounded interest even though we take the money out. Okay? That's the secret. That's the secret. If I can continue to earn dividends and interest while I am using the money, that's a win-win for me. And then once I start to go out and do things such as buying homes, buying cars, paying off real estate deals, real estate investors, you got to get on this deal because you got a lot of cash flow. And that cash flow that you're spending and you're using it on other products, you're probably not earning anything on the cash that you're allowing to go out into the world. It would make sense to have this vehicle where you could just dump your money. We're not trying to tell you that insurance is the only move to make, but it does make sense to, if I'm going to protect my wealth, and that's what we're talking about here, preservation of wealth is important. We need to be able to gather our funds, position it in a place that we know is protected. And inside the life insurance policy, it is protected. That contract between you and the insurance company is all there is. There is no middleman. But once you start to act like the banks, which means take in deposits and loan money out, take in deposits and loan money out, now you're operating like a bank. Okay? So does it matter who you loan the money to? You can loan it to yourself for all the things you want to do. Okay? And hopefully we're making it simple. So if you're a parent out there and you have children, you know, under 10, under 5, it probably is a good thing. I hear some people say, well, Ronco, slow down before you get me too excited. Isn't there a cost to buying the life insurance before we get to the emergency fund? The answer is yes. We gotta pay before we can do this thing, right? Because the power in what we're talking about is leveraging the insurance company's death benefit in their policy, okay? So yes, there is a premium due for the policy. The way that you got to do that, fill out an application, you got to pass the medical exam, need to be healthy. The younger you are, in most cases, the cheaper it will be. The healthier you are, the cheaper it will be. But let's just say your policy was $100 a month. That's just for the benefit of having life insurance. But that's not what we're talking about today. We're talking about the living benefit side. So let's just say you already have life insurance and you still need to be saving money. Let's just say you earn $50,000 a year at your job. It's always been recommended that you put 10% of your money away. I like to put a 20% of your money away, especially after COVID. We don't need anybody else telling us that, we're all secure at our jobs and we're going to go back to work after 1 week of trauma. No, it's today you need to plan for a couple of years in case that ever happened again. And it's already happened, so I need not to try to make you believe what I'm saying is true. It's happened, okay? So if I'm going to do that, if I want to use this policy, it makes sense for me to probably put away an extra $1,000 of my $50,000 of income, if it makes sense. So I want to put some money away, but I don't want this money to be locked up where I can't use it anymore. Well, if I put it in above my life insurance policy, let's just say, again, my premium was $100 a month, but I'm going to put $1,000 of savings into my policy. I'm going to overfund my policy. That $1,000 goes straight to your cash value, and then you're able to use it at a future date for whatever reason you want. Now, is that a good deal or a good deal? For any reason you want. You don't have to worry about 65 and a half, being age 65 and a half to use it. There's no state taxes. There's no federal taxes. There's no 72 and a half required minimum distribution. None of that. None of that. There's no walking in a bank, filling in an application, asking for your equity. None of that. It's as simple as, I need to use my funds. Let me call my agent or my insurance company, request a loan, and 3 to 5 business days is direct deposited right to you immediately. So that makes this a perfect instrument to use as your emergency fund. When we talk about emergencies, we talk about things I need to get my hands on pretty quickly. This past week, I had an emergency. You had to get, your hands on some cash flow for whatever the reason. But I know if I get my hands on my cash, I'm not going to interrupt the compounding interest. It's still going to continue to grow as expected. But in the meantime, while I'm handling this emergency, I still have access to my capital. Okay? And then using that capital, while I'm using my capital, I'm still earning compounded interest. Now, for me, that is probably one of the best types of emergency funds. Why? Because I can use my capital while it's still earning money. Now, in comparison to going to a bank, I could probably save my money in a bank, but they're not paying me a dividend for that. It's not uninterrupted. Once I take that money out, it's not doing anything for me. And last I checked, the statements at the bank were less than 1%. So you're probably not seeing that. I'm not interrupting my dividends that potentially could come to me for the rest of my life. This is why I use the insurance policy, because every move I make counts in the long term of things, because my dividends and my interest is based on how much money has accumulated, or how much accumulated money went through the policy over time. So 15 years down the road, 10 years down the road, 30 years down the road. Parents, it's a great thing to do. If you're trying to save for college, there's no limit to how much, to how much you use it. There's no limit to what you use it for. There's other plans out there, the 529 plan. You got some self-directed IRAs, but there's rules to that. If I have the 529 plan, I can't take it for any use. It has to be used for educational use. The education is, we got a flat tire and we need some extra capital. I hope you have that in your pocket, but I'm just saying, if I do need access to my capital, I can get my hands on it. It's not having to be designated for one specific thing. I don't know about you, but I like the flexibility to be able to do many things. In this past week, we've talked about how we can use it. And it's amazing to me over the years, when people start to really start planning and getting into the infinite banking side of it, or the becoming your own bank side. It's interesting that people forget that they're overfunding their policies, and they're still focused on their stocks, their 401ks, maybe even their IRAs. They're focused on the money there, but they never look at the money that's in the insurance. Maybe that's because we're programmed to think about all the other things except for this secret financial tool that bridges the gap in most cases when it comes to finances. This is why millionaires and billionaires have been doing it forever, because they don't have to ask anyone and they don't have to share with you how much value's in the plan. That's a good thing. That means you can keep all your secrets to yourself. All right? And when that day does come, when the lights go out, we are ready. We have accumulated enough cash. And the beautiful thing about the cash that I'm accumulating, if designed properly, the death benefit increases. So if I bought a $100,000 policy, meaning that when I die, $100,000 goes to my family, but let's just say over the course of 20 years, I've put in X amount of money, that's going to increase the death benefit. Instead of $100,000, now I got $500,000. And when I pass away, that goes to my family, income tax free, without an increase of premium. It's really simple. I think sometimes we have to be careful about the information that we get sometimes. Sometimes you get a part of the information, the beginning. Sometimes you may get a horror story. Sometimes you may get someone's, just plain and simple, lack of information. Sit down with your professional. I'm telling you, sit down with your professional. Build a relationship with your trusted advisor. Tell them what your goals are. Because along the way, our money is important. And I want to be able to use my money to leverage up to increase my wealth at all times. Not sometimes, all times. If I want to take money out of my safeguarded funds or my emergency funds, I wouldn't advise you to take out the emergency piece to it. However, if I were going to use the cash value, we have already talked about that you can use it for anything. If I want to buy the down payment on a house, I can borrow against my cash value. And remember, it's still uninterrupted. It's compounding interest that's uninterrupted. So even though I'm going to take a loan against it, it is still earning compounded interest. And buy a piece of real estate. The real estate is where I'm going to get my returns or my cash flow. The life insurance is basically the bank. The life insurance is where you're going to get the loans. The life insurance is where you're going to pay the loans back to. And then guess who gets to use it all over again? You. If this has been some information that's been helpful to you today, put it in the comment. Give me a thumbs up. And if you're watching the replay, don't forget to subscribe. Subscribe. And we need you in the room. We need your energy in the room. And this is a wonderful community. And if you're checking us out on Facebook, go to our Facebook page. It's Lifestyle Focus Wealth and on Facebook or lifestylefocuswealth.com. Get involved. There's a community of people talking right now. I know there's other people who are interested in becoming a Lifestyle Focused Wealth Advisor. We have many people already starting their insurance courses in class as I speak because they want to be able to give this valuable information to the public. To the public. Information that we should know. We should know because it benefits us. It is a way to shorten the generational wealth gap. And I like having a play in that. And I like having the fact that if we're encouraging you to have better understanding, more control over your cash flow, you're teaching this to your kids. You're teaching this to your spouses. Unintentionally, you're forcing your advisor to be more educated because now they got to acknowledge the value of your policy. And on top of it, it makes sense for you, the consumer. If I'm going to pay a fee, I would rather pay a fee that is participating in a dividend. In other words, if I got to pay for your financial course, why don't I take a loan for my insurance and pay for your course? Because I'm still earning money on the dollars that I would have spent anyway. While I'm getting educated and learning up, guess what? I'm still earning money. I'm still earning money. And I hope the course is valuable to you so you could go out and use this information, being financially intelligent, buy some real estate, purchase a business. All these things matter. So I see some people coming in. Hi, Samantha. I see you. I know you got a question. Your question, you're asking me, after I fully fund my bank and I have my deposits and paychecks in my accounts, what's next? Well, it doesn't quite work like the bank that in that case, meaning you're not going to take a direct deposit from your paycheck and go straight into an insurance company. However, we do have to use the banks as the middle person or the middle place because your paycheck can go to their bank. But I would say probably the best place to set up your direct deposits is from your bank into the insurance product that you have. You can set that up simply by creating a bill pay and setting it on auto, and it can go. But I would advise you to sit down, talk to your advisor, and schedule out a plan to do that. But in most cases, that's how it's done. Okay? Good question. Is there any other questions in the room? If you're out there and you got another question, feel free to put it in the comment. Don't forget to like us, share us with a family or friend, and we want you to be a part of our community. I have to tell you, this community is awesome. We've already seen people who have created more than 6 figures into their emergency fund. We've seen people leverage their emergency fund and buy businesses. We've seen people paying off or refinancing their cars or their homes. Taking control of this finance is an awesome thing to witness. And I'm just so happy that you guys allow me to be a part of that. And we need your help to grow. This is information that I think the world should know. If you got friends and you're going out tonight, you should be going out on uninterrupted cash value. You should not spend your money, not $1, if it's not earning a dividend. If it's earning a dividend, I don't have a problem what you spend it on. That's just me. But if you do know this information, it's much better when all your friends are just as wise as you are. And when all the people around you have the same understanding that you do. And they understand that their wealth is important. Please make sure we understand. If it's important to me, it's probably important to you. So we're not going to go and spend our money in a way that doesn't make financial sense. If you agree with that, put it in the comment. Meaning, I'm not going to go out and buy a Birkin bag for somebody, especially if I'm going to give the money away. It would make sense if you're going to do that and you really love the person, use the money that's uninterrupted and participating in some cash value, participating in some dividends and interest. That way, at least you have an opportunity to get your money back, maybe when that person's gone. So this is not just an insurance show. We're going to talk about lifestyle-focused wealth. So if I step on any toes, I'm sorry. Change the channel. Because if I stepped on your toes, I'm probably talking to you. Because the people in this room, we're going to be financially savvy. We're not going to just waste our money. And we're going to have opportunities to do things with our wealth that most people dream about. And we can't do it when we're giving it to the bloodsuckers of the world. We can't do it. Our goal here is to become wealthy and control our wealth. Okay? So if you're interested in having a one-on-one with me or anybody on our team, lifestylefocusedwealth.com, go there, book your one-on-one, and hopefully we get a chance to hear about your hopes and dreams and allow us to create an instrument using our favorite secret sauce, our favorite secret financial tool to help those dreams come true. There's just so many opportunities. It's just not enough education about how to use them. So it's important that you get the right people, the right team, and the right strategies to help you reach your goals. They're out there. You're not limited. Okay? So I see more people out there viewing us this afternoon. If you got a question, put it down in the comment. I would love to answer it, and I know that people wait till after our live and they try to get me and on the phone, and we're talking for 2 to 3, 4 hours. Help me during this type of live broadcast. Help you. Give us the question and let's answer it for the whole community, if that makes sense. And then when you do the playback, be sure to do me one favor. If you're part of our Lifestyle Focused Wealth group, share it with your community. Share it on your Facebook. Share it on your TikTok. Go to our YouTube channel, hit the subscribe button, the notification button, and then you can share it across all your social media platforms. So we want to be in their ear everywhere they go because we got people spending money right now. The question is, are you spending money the right way? And are you spending money that really needs to be in your emergency fund? Let's create it. You know, let me go back for a moment. I want to talk about that good book that I really like to talk about. It's called The Richest Man in Babylon. If you don't have it, go get it. The Richest Man in Babylon. He said, hey, listen, we're going to put away 10% of our money for you first, 20% for debt, and then 70% for your lifestyle. That's what the book said, okay? It still holds true today. The first 10% goes to you. Now we're going to focus on paying off these debts. The second 20% goes to debts. If your reward and your incentive to do this is the fact, it's interesting. Here we go. We already got the phone calls going. While I'm live. Y'all, I'm live. I can't talk to you on the phone while I'm live. It's for real. We're live. The 20%, let's go back to it. The first 10% goes to you. You should be putting it away. The 20% should be going to debt. And 70% should be going to your lifestyle. For you religious types, tithes and offering comes out of the 70%, not the first 10%. But that's up to you, however you do it. I'm just going by what they've talked about. And this is the Babylonians that created this idea, right? The original financiers. But once you've paid down your debt, your incentive is the fact that you now have that 20% freed up. You no longer have a car loan. You no longer have credit card debt. You no longer have all these other expenses. So once we're free at 20, now you want to take it, add it to the 10, you got 30%. 30% of your income now needs to go right back to saving in your emergency fund. When we design these policies for you, I like to use a 60-40 mix. So in other words, 60% of your premium would go into building your cash reserve, and 40% of your premium would be into the insurance policy. So it's not quite as expensive as you may think it is. However, the growth of the money is what you're really looking at. I know that there's some insurance advisors out here that probably do more and sell more because they get paid a commission and the premiums are higher and they get paid a commission. But when you're doing the infinite banking strategy and the IBC strategy or becoming your own bank, it's the opposite. The agents and advisors that use this actually get paid less. The clients get paid more. So that's one of the reasons why I would recommend going to the courses and classes so you can learn from experts, learn from people who have actually done it time and time and time again. And then you start to see the whole community participating, doing things that others wish they could. And that's what this is all about. All right? So, hey, y'all, it is Friday. What are you doing for this weekend? Are you having a party? Did you buy your party chips from your emergency fund? Are you traveling this weekend? Did you buy your travel tickets from your emergency fund? Are you going on vacation with your family? Did you get the money from your emergency fund that's uninterrupted, earning a dividend, and you can put it back over and over and over again? All right? Well, y'all, I know that you're doing amazing jobs. If you're in the group, keep doing what you're doing. The collaboration amongst members has been fantastic. Reach out. You have permission. Reach out to somebody in the group. If there's information that they may have, we want to know. What careers are you in? What is your business? Maybe we can send you more just by talking, okay? And that's the beauty of this group. It's a community of people who are communicating, people who are wanting and hungry for more information. But there's all we need in the room. We have people scheduling their payments into their banks every single week. You should. We've been doing it with their banks all of our lives. It's time that you start doing it with your bank. And if you don't have a bank of your own, and the bank I'm talking about is your insurance policy. If you don't have one and you're interested in learning more, go onto our site, lifestylefocuswealth.com. Click on one-on-one. Or you can join me on my site, roncojohnson.com, and you can catch a replay of this message and share it with your family and friends. And you're more than welcome to go to all the things that we're doing there and learn more of how you can be where you want to be financially. Okay? And I hope that we are able to help. I want to thank you in advance for watching this broadcast. Family, friends, and new guests, I want to thank you in advance for helping us grow. We're now approaching our 100 member group. I think we're over 80 members in the group right now. So the group is free for you to join as long as you answer all the questions. And if you're part of the community, our community is $20 a month. But if you're paying the annual fee, it's $16 a month. This is financial literacy. So you can have an expense that you can write off at the end of the year. But it will be more than worth it to do so. Because the folks that's in the room, you can talk to, bounce ideas off of, and maybe even collaborate in business. And that is where the magic happens. Now we're generating more money that you can put into bigger banks. And now you're affecting the community at large. I tell you, I get so excited about it. I'm sorry my voice is a little low today, but I can tell you, I want to thank you guys in advance for participating, for telling your friends, for inviting your family members. And I want to talk to all of you, but this is probably one of the best ways to do it. And if you're introducing someone to these concepts, this is the best way to do it. They don't have to buy anything. They don't have to buy anything. They can listen. They can even ask questions, and we accept that. And we're going to answer them on this platform. If you need more help, schedule your one-on-one. I'm not hard to find. I'm using Deion Sanders' words. I'm not hard to find. So we want to be here and be able to support you. Okay. So think about that. Talk to your family members. If you have more questions about, hey, can I set up an emergency fund? Yes, you can use your cash value as an emergency fund. I would recommend it. It's one of the safest ways. If I have small children, it's one of the least expensive ways to buy life insurance and give the kids a Head Start program of my own. If I have kids that are older, maybe college age, and I'm a parent closer to 60 or 70, it might be a good idea to insure your children, become the payor, and overfund it. If I could put $12,000 a year into it, I could probably use that as a gift tax. But we have to talk about how you can do that separately in our one-on-ones. So if you want to gift money either to your church, to an organization, or to a family member, there are ways to do that. Basically, you're gifting an emergency fund that's already loaded. What a great gift. The holiday season is coming up, and we get extremely busy at this time of season. So don't miss out. Get on the calendar today. I'm telling you in advance. We have people that schedule 4 to 6 months ahead of time. So if you're interested in some of the concepts that you've heard, some of the other videos that you've heard, get on our calendar so we can talk to you about it and get one of our advisors or one of our team members to talk to you about it. Okay? So that's my time for this Friday, folks. It is now 10 minutes till 2. I had to get a lot of information out to you for our live today. It's Lifestyle Focus Wealth Friday. Don't forget to go on our site, get your swag gear, put your orders in. This is still our soft launch, and we want to see everybody in the room with their Lifestyle Focus Wealth hat, gear, shirts, backpacks, mugs. We want to see it all. And, very soon we're going to start doing our events at large, and people are going to want to know, where did you get that? How can I be down? And at that time, today's fee ain't tomorrow's fee. You better get in while they can. So we want to make sure that we can help, okay? All right? So if this has been helpful to you, bless someone. Bless someone. Share this information so we can be a help and serve you. Hey, that's my time. I'm Ronco Johnson. This has been When the Lights Go Out. Are you ready? This is Lifestyle Focus Wealth, and I look forward to seeing you at the top. See you next time.